Hi guys, welcome back. We're going to jump into chapter 5. So this is our third straight chapter where we're talking about the costing that companies will use. So we've already talked about job costing in chapter 3. We dove in a little deeper there for chapter 4 where we looked at departmental overhead rates as well as activity-based costing. Now here we're going to start into chapter 5, which we're going to look at process costing. And as you can see here on our 3 pictures, process costing is used by companies, kind of those mass manufacturing companies that we think about probably when you think of a manufacturer, where we're just making the same product over and over and over again. Every one of these products that a process costing company would make is going to be the exact same thing. So it's large batches of these same types of products. And that leads us into our first question here, which I pretty much just answered for you. But process costing is used for products that are different and produced continuously, similar and produced continuously, C, individual units produced to customer specifications, or D, purchased from vendors. So again, for process costing, it's manufacturing companies that produce the same product over and over and over and over and over again. So the answer there, B, similar and produced continuously. So that's the type of thing you want to keep in your mind, these types of products. So as you go through and think about who uses a process costing system in their accounting system, it's those businesses that mass produce the same product over and over again. So we had on our picture there Coca-Cola. Every bottle of Coca-Cola we buy, we anticipate it'll be the same thing. Cereal manufacturers, and our last option there was paper towels. Paper products are a good example of companies that use process costing. So our learning objective number 1, we're just going to look again, just a refresher, the difference between process costing and job costing. All right, so these are our 2 basic costing systems. Most companies will fall into one of these. So job costing, again, unique goods, small batches, also service companies. If we think about a service company, accounting firms, doctors, lawyers, we're providing a unique service to our customers. So we're going to cost out each one of our customers based off of the services they are provided. Process costing companies, that's just it's a series of steps. So every one of our products that we make, every individual piece of inventory that we make, every bottle of Coca-Cola that is produced goes through the same steps as the bottle to its left and the bottle to its right. So every one of our products are going to get the same process done to it, and we basically have our manufacturing plant set up, and then it's just going to roll through. Everything is going to get that same process done to it. Large quantities, batches, hundreds and hundreds and hundreds of products going through, and so we're just going to account for everything on batches. So our example, Jelly Belly, Shell Oil, Coca-Cola, cereal manufacturers, every one of their products is exactly the same, mass-produced, same product over and over again. So in our book, if you're following along with the book as well, Jelly Belly is the company that we kind of follow through its steps. And if we think about making jelly beans, right, we're not going to figure out this jelly bean cost us a nickel, this one cost us 2 cents, this one cost us 5 cents. It would be impossible to do that. They're all the same, so we're just going to do average costing. We're going to figure out how much each one cost just based off of we produced 1 million that day and it cost us $1,000 or something like that. We're not going to go through and spend the time to try to figure out what each jelly bean cost us, or if you're Shell, what each gallon of gas cost us individually. We figure out how much the batch cost for that day or that week, and then we divide the number of units, the number of products by that cost for the batch. So if we think about the flow of cost through a job costing system, really, it's going to work similar to our process costing that we'll see in a minute, but we start with our manufacturing costs, so those are the same regardless. And for job costing, the uniqueness here is that we have one work in process inventory account, which we can see at the bottom, and the raw materials, our wages, and our manufacturing overhead are all allocated to that one account. But within that one account, we are broken. We break up our costs into the individual jobs. So as every job, 101, 102, job 100, as every one of those costs are going through and being manufactured, or every one of those clients are being serviced, we build up those costs on that job cost report. If you remember back a couple of weeks ago with the job costing. So we have one work in process account, but that work in process account is going to have multiple job costing reports or job costing summaries that add up all the costs on the individual job as it goes through and it's being worked on. After that, it goes to work in process. After work in process, it goes to finished goods, and then finally it goes to cost of goods sold when it's actually sold to the customer. Process costing looks a little bit more cluttered, but if you kind of avoid or we kind of look at the basic setup here, we still have our same manufacturing costs, direct materials, direct labor, manufacturing overhead. The real difference and what makes it a little different and what makes the accounting a little different in the flow of costs is you can see we have multiple work in process accounts at the bottom. So we have work in process centers, shells, and packaging. So again, this is Jelly Belly as our process costing company example. So we just have, we break up that work in process rather than having individual jobs. We're going to have individual centers. So we have at the top the flow of physical goods and the flow of the physical products. We start with the centers. That would be our first stage of manufacturing. Then it goes to shell. Then it goes to packaging. So our difference from an accounting standpoint is that work in process stage of the manufacturing. Job costing, we have one work in process account. Process costing, we're going to have as many as basically we have departments in our manufacturing process. But it's the same raw materials, wages payable, manufacturing overhead. All those three manufacturing costs are still going to get allocated to our work in process. We just get allocated to our different accounts as it goes through the different departments in the manufacturing. The other key difference there is that as our products, as our batches are moving through the physical manufacturing process, so once it gets done with center processes and it goes to shell, in the accounting system, we're going to move it from work in process inventory centers to work in process inventory shells. So that's the other key difference, is that we have multiple work in process accounts and the costs are going to follow basically the flow of physical cost or the physical manufacturing in the accounting system. So that's our difference there. The other thing to keep in mind is that if you think about the manufacturing process, we start off with stage one and then we move to stage two and stage three. So at stage one, we add materials, we add labor, we add manufacturing overhead to do that first process. So we create the centers. If you ever think about a jelly bean, how it's manufactured, they create the inside. Once the inside is created, and we can see on our diagram, it would then go to the shelling process. So those centers and all the costs move to the shell processing stage. And again, materials, labor, and overhead is added. Then we have a shelled jelly bean or a batch of shelled jelly beans. And then all of those costs move down to the packaging process, at which point we add additional material, labor, and manufacturing overhead until we have our finished good, which is a package of jelly beans packaged up and ready to be sold to our customers. And so if we think about that, and if you think about going outside and hopefully, we won't have any more snow for the year, but if you think about making a snowman or a snowball, it's similar to the process costing, the flow of costs. We start with a very small ball of snow, and then as we're building it up, we're going to add more and more costs, and therefore our snowball is going to get bigger and bigger and bigger. But we start with that stage one, and then we roll more snow, which would be stage two, but it still has that stage one cost at the center. So as our inventory, the batches are moving through our manufacturing process, we're going to be adding more and more and more and more snow out, creating a bigger and bigger snowball. So we start with our stage one, we do our manufacturing, we add some costs, then we roll it over to stage two where more costs are added, roll it over to stage three where more costs are added until we're finally done. So it's going to get larger and larger and larger. And so as we physically move our inventory to our different departments in the manufacturing department, in your manufacturing plant, we're going to actually move the costs in our accounting system from each department. So we follow the costs, follow the physical flow of inventory. So for most companies, and just keep in mind as we talk about our three manufacturing cost categories, for manufacturing companies that use process costing, generally they just break it down into direct materials and conversion costs. They don't take the time to separate out direct labor and manufacturing overhead. If you think about the type of company that's going to use process costing, highly automated production, big machines doing the manufacturing, and we might have an operator or someone feeding the information or feeding the products into the machines. So for the most part, a manufacturing company that uses process costing is gonna, rather than separately stating direct labor and manufacturing overhead, they're going to include just the conversion cost, because it's not worth the time to break out the direct labor from the manufacturing overhead. So just keep that in mind as you go through these processes and you go through some of your examples. It's still the same three manufacturing costs, but because direct labor is generally much smaller than the other two categories, we just lump it in there with the manufacturing overhead, and we look at direct materials and conversion. So just keep that in mind. When you see that in examples, we're still talking about the same three costs. We're just combining the direct labor and the manufacturing overhead and just calling it the conversion costs. All right, so first, learning objective, we're going to compute the equivalent units of production as we go through, and that's one of the key items in this chapter. So we really want to make sure you understand how to calculate the compute the equivalent units of production. So companies with work in process inventory, they express the amount of work done in terms of fully completed units. So what that means is when you have a company that's doing large batches of products, rather than trying to calculate, all right, this one's or this one's 75% done, this one's 30% done, this one's 50% done, so we're going to allocate some costs. What they go through is they calculate for the ending work in process what the equivalent of fully completed units are. So we use the formula, number of physical units times the percentage of completion equals the number of equivalent units. So our example, if we have 5,000 units, 80% complete, and then with process costing, because it's the same process done evenly, so every one of our products goes through, we can assume that they're evenly done, right? Because we have batches running through, we're going through stage one of our manufacturing, and it's just making its way through. So that's why we use this percentage of completion. So it's the percentage of all of the 5,000 units, where are they completed? So we have 5,000 units, 80% complete. So that's the equivalent of saying we have 4,100% complete units, 5,000 times 80%. In other words, if you think about if you're filling up 2 cups of water and you get to the end of the day and each cup is halfway full, that's like saying it's the equivalent of having 1 full cup, 2 times 50%. So we're just trying to express our partially completed units in terms of fully completed units, which will make our costing that much easier. Easier to say 4,000 completed units than trying to say, well, 5,000, 80% complete, so we have to manipulate our costs. We just express it, we get an average, and therefore we can more easily allocate cost to it. So it's and this is our formula we want to write down, number of physical units times the percentage of completion, and that gives us our number of equivalent units. So as we go through some of the assumptions, process costing, we can use 2 different methods to come up with our equivalent units. For the purpose of this chapter, we're going to be using weighted average. The purpose of this class, we're going to use weighted average. There's also the FIFO method. So all really need to know about FIFO is that it differs in the treatment of beginning inventory from weighted average, and that it's just basically another method. And it's more complicated. So as you go through, for the exam time, you don't need to know how to do the FIFO method of doing equivalent unit calculations. You just need to know that there is a second option for you. The difference would be that we take into account beginning work in process inventory, and that FIFO is generally more complicated. There's a lot more steps involved, a lot more tracking you have to do. So for this class, we're going to only use the weighted average method, and from a cost-benefit standpoint, it's what most firms use anyways, because it's so simple and easy to calculate. So that's why we're going to teach that to you. If you go on later and you get into a company that uses the FIFO method of process costing for equivalent units, that'll just be a little bit more learning for you to do. For the most part, though, all we need to know for this class is that how to use the weighted average method, and then also just know that there is a second method, and just basically it's a little bit more complicated to calculate and to track, has a little bit more requirement for resources, and the significant difference is the way it treats the beginning work in process inventory for FIFO method. All right. So learning objective 3, we're going to use process costing in the first production department. So if we think about our manufacturing, we have stage 1, stage 2, stage 3, which is our different inventory manufacturing production departments. So as we go through, the rules and how you account for stage 1 slightly differs from stage 2 and beyond, but it's the basic same principle. And for the purposes of this class, where you're going to be most of your exam questions and homework questions and quiz questions is going to relate to this first stage of production. I'm going to highlight when we get to the second stage, which is our next learning objective, what you need to know about the other stages. But for the purposes of calculations and formulas, this learning objective right here is what you're going to really want to focus on for homework, quiz, exams for this chapter. So just keep that in mind. There might be, just like with the FIFO, you won't need to know how to calculate it or work with it. You just need to know the key concepts of it, which is what we just pointed out. For when we talk to the next learning objective, the second or third stages of process costing calculations, I won't ask you how to calculate it, but I might ask you some of the key components and key differences from first production department process costing calculations. So again, I'll point those out to you as we go through, just so you know, but just, kind of if you're taking notes along, really this learning objective number 3 is where you want to be focusing on the heavy math calculations. So again, we're going to use the weighted average method, and we basically go through and we have 5 steps. So as you go through your homework and your quizzes and your practice exam and your exam in the next week or so, just remember that it's these 5 steps. So have these slides basically out in front of you, and every one of the problems are going to be either asking you to do it from step 1 to step 5, or they might do step 1 and step 2, and then that's your answers. But really, this 5 steps, if you understand how to do these 5 steps and what you're calculating, that's going to go a long way in you doing well for this chapter. So we have this 5-step process here, and we're going to go through them step by step as related to our example company. So step 1, we go through and we summarize the flow of physical units. All right. So what we're going to do is, if we look at our Excel diagram here, for step 1, what we're looking at is column A and column B. So we have our step 1, our flow of physical units in column B, and we have our information for column A for C view shaping department. So for step 1, we go through and we just summarize the flow of physical units. So it's going to work the same way for every step 1. And I suggest as you go through these problems, just do out step 1, step 2, step 3, step 4, step 5. Just go out same by step by step by step. Don't skip the steps. If it's not asking for you, it's okay. Just go through the steps, and that way you just get comfortable doing it on the homework or on the in class or the week assignment, the word problems as you go through. The more you do them, the more comfortable you are, the easier exams will be and the quizzes will be as you go through this chapter. All right, so step 1, we summarize the flow of physical units. And for this step 1, we are not concerned with any sort of percentages. We just want to know full units. What are we summarizing? So we start with units to account for, in which we add our beginning work in process. So this is for October, so it's basically what did we not finish from September. That's our beginning work in process for October. We then add in our started in production during the month. So what new batch of units, new batch of inventory did we start? How many did we start? And that's going to give us our total physical units to account for. Then we go to the second half, and of that total, we calculate or we summarize how many units was completed and transferred out. So how many units did our department finish during the month? And then we add in what we have in ending work in process, so what we didn't finish, and that gives us, again, our total of 50,000. So basically, we take our beginning plus started, and that equals what we completed plus what our ending work, what we didn't complete, basically our ending work in process. So those two sides of the equation, if we know the first two numbers come out to 50, we know the second two numbers have to come out to 50 because we have to balance and account for all of our units within our department. So that's step one. Step two, we compute our output in terms of equivalent units. So for step two, we look at the second half of our equation from step one, which is that units accounted for. All right, so we break down for, and this is column C and D in our Excel chart here. For equivalent units, we break down into columns. One is direct material, the other is conversion. So that's our two categories of manufacturing costs, because remember, as we said, for process costing companies, we don't look at direct material, or we don't look at direct labor and manufacturing overhead separately, we combine them. All right, so for step two, we go through that second half, units to be accounted for, and we come up with our column. And this is, I would just suggest making this setup when you're doing these types of problems. Follow suit. It makes it easy. For the most part, for this chapter, the math isn't terribly complicated. Where it gets confusing is that it gets to be a little bit of a long process, so it's just keeping things organized on your paper. All right, so every time for this, we go with what was our completed and transferred out during the month. And for that, 40,000, and we just put 40,000 in each one of our categories. So direct materials, 40, conversion, 40. The basic premise behind that is that if they're completed and transferred to the next department, we've added all the materials in our department to the products, and we've done all the converting in our departments. All right, so a company doesn't move our inventory to the next department until it's 100% done. We've done everything we have to do to each one of those products. Where the math gets a little complicated is what we do with our ending work in process numbers. All right, so for this, we use that formula of equivalent units. We take our physical ending work in process and we multiply it by the percentage complete. Now the key thing here for these problems is generally they tell you the beginning work in process was X% complete, the ending work in process was Y% complete. For these problems, because we're using the weighted average, we only are concerned about the ending work in process percentages, okay? So when you see beginning work in process percentages, we don't use those anywhere, all right? So here, and they don't tell you in the PowerPoint, but in the notes I have from the teacher's edition, I know it says that we are 100% done for direct materials and 25% done for conversion. All right, so we take our ending work in process, 10,000 times 100%, and that goes in our direct material column. And then for conversion, we go 10,000 times 25%, and that goes into our conversion column. All right, so some of the key things to remember is we separate our two columns, direct material and conversion, and we go through this. We basically have two answers for all of these. For our equivalent units, we have equivalent units for material and equivalent units for conversion. All right, so we keep these separated out. We don't combine them. We don't add them together. And the other thing is that these percentages we talk about, and you'll see as we go through problems on the homework and on the quiz, and I do have a worksheet for you guys to work on just like last week. But you'll see with these problems, there's no necessarily 100%, the ending work in process, those two percentages, in theory, both have to equal 100%. So it's not like if you know your direct materials are 50% complete, therefore your conversion has to be 50% complete. Look at them almost independently from each other and just go with what the problem tells you. Sometimes the problems don't tell you that it's materials or conversion on some of the simpler problems as you try to go through the concepts. So just keep that in mind, but get familiar with the steps. Have these open for you. Have the PowerPoint for this chapter open with you or print it out as you go through your problems for the week. All right, so here's our calculations. So again, our completed and transferred out, those are always the same in each column, and the math behind it is 40,000, the number of physical units, times the percentage complete. And again, because they are completed and transferred over to the next department, that means the percentage complete is 100% for materials and conversion. All right, so for our partially complete, or our ending work in process, again, it's 10,000 units. And again, the physical inventory, those are the same for each one of our categories, conversion and direct material. Our difference is just the percentage complete. So for direct materials, as I mentioned, it was 100% complete. For conversion, those 10,000 units were only 25% complete. So we have our equivalent units for direct material is 10. Our equivalent units for conversion, 2,500. All right, then we go through and add up our two numbers, the 40 from the completed plus the 10 for the partially completed for direct materials, and then the 40 completed plus the 2,500 for our conversion, and that gives us our two answers. All right, so don't get confused with, sometimes it says they're 100% complete for labor, sometimes it says it's 100% complete for materials. They can still be partially complete because even though the direct material is 100% complete, those units, those 10,000 units, are still considered partially complete because all of the conversion process hasn't been done to it, all right? We can't move the units, 10,000 of them, just because all the materials were added. They also have to be the conversion, the direct labor and the manufacturing overhead has to be added as well. So don't be confused. These are the types of problems where just the more you do them, the more comfortable you'll be with them. All right, so we have our quick check here for you guys, just to make sure we're paying attention. So for the current period, Jones started 20,000 units and completed 10,000 units, leaving 10,000 units in process, 35% complete. So this is an example, kind of a basic problem, where we don't have a breakdown of materials and conversion. That's okay. It's a simple problem. We're just trying to get through the steps. So what was our equivalent units of production for Jones for the period? All right, so take a few minutes. Try to solve this one. My suggestion, go back or have the slides up. Do step 1, where you summarize your physical flow of inventory, and then do your step 2, where you actually calculate your equivalent units of production. All right, so take a minute, pause the video, do the math out, just give it a shot. All right. Okay, welcome back. Hopefully you guys paused it. So we'll go through and we'll calculate our answer. All right, so our answer is 13,500. So if you had gone through this problem, if you did the step 1, you would have started with what was your beginning work in process. So if you read through, it doesn't say anything about any beginning work in process, so it would be 0. And then you'd add in your started units, 20,000. So that's our total units to be accounted for. And then as you go to the second half, that would be 10,000 were completed, 10,000 were 35% completed. So that's our three numbers. So we take our 10,000 times 100%, add 10,000 times 35%. That gives us our equivalent units of production. So again, my suggestion, do step 1, step 2, even though the numbers are spelled out for you there. That way you're just comfortable every time understanding what you need to calculate. And it's the same 5-step process. That way, the more it is comfortable, the more second nature that all becomes to you. All right, so next we go through, we compute the output in terms of equivalent units. That was what we just did. So next we go and we summarize our total costs to be accounted for. All right, so for here, we break this down again for conversion and direct materials. And for here, this information is going to be given to you in the problem. So all these information, the percentages, the dollars, they're going to be given to you in the problems. It's your job to fill them in into your different steps. So for step 3, when we're summarizing our total costs, the way they're presented is what was the cost in the beginning work in process, and then what costs were added, and that's the total cost to be accounted for. So again, the problem said we had no beginning work in process units, therefore we also had no beginning work in process costs, and then we added 208,000 of costs during the month of October. All right, so this 208 is how in steps 4 and step 5 we're going to summarize and we're going to break that down between what we completed and then what's left over, what's going to remain in our department for this month. All right, so basically step 3 is kind of like going back and accounting for the physical flow of units. In this case, we're accounting for the physical flow of costs. So what do we have in our department to start with? And what additional cost do we add during the month? And then in step 4 and step 5, we're going to allocate that to our completed units, so what we move to the next department, and then what is left over in our work in process. So that way we can properly, as we're physically moving our parts, we're actually going to physically be accounting for our costs in our accounting system. So step 3, it's always going to be add your beginning work in process for materials to your cost added during the month for materials, and then do that same process for conversion. Beginning work in process, cost, conversion, add in your cost added during the month of October for conversion, therefore you need your total cost to be accounted for. Step 4 is we compute the cost per equivalent unit. And what we're doing there is we're taking our total costs to be accounted for in step 3, and we're dividing it by our total equivalent units that we calculated in step 2. All right, so in here, for direct materials, it's $140,000 divided by 50,000 units. So each one of those units cost us $2.80. For conversion costs, it's the $68,000 that we just calculated on the last slide divided by the $42,500, $1.6 per equivalent unit. And you can see this is why we calculate the equivalent units. Rather than trying to figure out, we had 40,000 full ones completed, and then we had 10,000 that were 25% complete, so we have to adjust there. We break it down into this equivalent units because all of our processes, and we're just doing average costs anyways, because we're not tracking the cost of one individual jelly bean or gallon of gas that goes through our manufacturing process. Because we're just using averages anyways, we just get basically an average equivalent unit, as opposed to trying to break down, these are 75%, these are 40%, these are 20%. Let's just get an average and just keep our life simple and not make us go crazy, because we are just averaging out our products. All right. So now for this, for every individual unit of materials, it costs us $2.8, and every equivalent unit for conversion, it costs us $1.6. So now we can go through and, based off of this information, we can now allocate to our ending work in process, so what remains in our department, and then we can allocate some of that cost to our units that were completed, the units that moved to the next department. And to do that, we basically set up our spreadsheet or our paper again, and we do with our completed units, so that's what we do at the top, and then we have our work in process units. And for this, we're using our equivalent units that we calculated. So for completed and transferred out, it's our 40,000 of direct material times the 2.8, and for conversion, it's 40,000 units times 1.6. And for here, we then add across. So of those, the 40,000 units that we completed and transferred out to the next department, it cost us $176,000. The work in process, the 10,000 units that were partially completed, we do the same process, 10,000 times 2.8, and then 2,500, which was our equivalent units for conversion, times 1.6. So those units that remain in our department, in Department 1, they cost us $32,000. And when we add up our 176 and our 32, we can see that equals our 208, which was the cost we allocate, or the cost that we had from step 3, which was our beginning plus our additional costs added during the month. So those always have to reconcile. All right, so as you go through these, there's a lot of built-in checks to make sure you're on the right path. One of the most important ones there, the cost that you have to account for equals what you've assigned to those two different categories, completed and ending work in process. All right, so that's our 5-stage process for process costing. And again, this is just for Department 1, the first stage in our manufacturing process. So my suggestion, as you go through your homework and your quizzes, you have either this PowerPoint up or just the slides themselves up, and you can just follow along, set it up the exact same way. Now, for the most part, the problems, they're going to give you the beginning, or at least 3 out of the 4 of the beginning, the started, the completed, and the work in process. So the easy problems give you all 4 of those. The more difficult problems give you 3 out of 4, but you can easily calculate by setting up your step 1. Beginning plus started equals a total, and ending plus completed equals a total, and those 2 numbers have to agree. So if you know what the bottom half is, and you only know what one of the 2 from the top half is, you can figure that out. Or vice versa. If you know what the 2 top numbers are, you can figure out the missing number from the bottom half. All right? But go through, have the stage 1, stage 2, stage 3, step 1, step 2, step 3, step 4, step 5. Just have that information, and it's the same process, just different numbers. The percentages are given to you, and the dollars are also given to you. So you have to know what numbers to use. All right? Next, to calculate average unit costs, we average the cost of one completed shaped unit as $4.40, and then the average cost of one partially shaped unit, $3.20. So we get our average costs. At that point, we don't use our equivalent units. We just use our total physical inventory divided by the cost based on how we allocated it. All right, so learning objective 4, we're going to go through and prepare the journal entries for our process costing system. And these are going to look very similar to the journal entries we use for job costing. And again, for this class, this is a managerial accounting class, so while you guys are all accounting majors, I'm not going to necessarily be concerned about having everyone write journal entries out. There are some key journal entries that I've kind of pointed out as we gone through the presentations for the semester that you need to know about and need to work with. But for the most part, I'm not terribly concerned with having every individual person being an excellent maker of journal entries. I'm more concerned that you understand the journal entries. So just keep that in mind. So on the exam, I don't heavily test on journal entries. So it's just kind of the important ones that I point out to you that you'll need to know. So for this one, the key thing to remember for process costing, as you're comparing it to journal entries for job costing that we saw back in chapter 3, is indicating which work in process account is going and being used. And we can hyphenate, and we have here, we designate that by just putting work in process inventory for shaping, because we want to make sure in our accounting system, when we're putting costs and we're building up that work in process, that we're actually building up the correct one. So in this case, it's work in process inventory shaping, because we're in the shaping department. For this company, they'd have a work in process account for every individual department. So if they don't properly indicate which work in process account is being allocated costs, we're going to throw off our numbers. So same thing with our wages payable. For the first department, they use $21,250. So we want to make sure that when we make our journal entry, we indicate what work in process account that's going into this shaping. For manufacturing overhead, we allocate it in the same way that we would for job costing, using either one plant-wide overhead rate or a departmental overhead or an activity rate. But we allocate it again to a specific work in process inventory account. So again, there's not just one. And then we have another form where we're allocating it for our job costing. We have just multiple work in process inventory accounts. So that's our key takeaway there for our journal entries 1 through 3 when we're adding our manufacturing costs to our different departments. The key other journal entry that you'll want to really make sure you understand for this chapter is, because we have multiple work in process accounts, as our batches are physically flowing through our manufacturing plant, going from department 1 to department 2 to department 3, in our accounting system, when we've calculated that work in process costs that are completed and transferred, we make sure that we take it out of our first work in process account, shaping, and then we move that cost to the work in process inventory insertion. So we make sure we physically move the costs as the batch physically moves from department to department. And this is where it's important to make sure you have crediting the department it's leaving and debiting the department it's going into, because we have multiple work in process accounts. And that's where being important and indicating, whether it's through a hyphen or a dash or a colon, we indicate that it's going from one work in process inventory account to the next. That way the T accounts have that flow of information, that flow of costs. All right, so what we've talked about so far is that first stage of manufacturing, that first department. So learning objective 5, and it's the last learning objective, we're going to look at the differences for the second or later. So basically anything after that first initial department. All right, so the difference there, it's the same 5-step process. The only thing that's different, and like I said, I'm not going to quiz you or have on the exam the calculating it out differently in doing calculations related to the second or later departments. What I just want you to know, and it'd be more like a multiple choice question or a part of an open response question, you don't have to do the calculation. You might just have to indicate how would you know or what would be different if it's a second or later department in the manufacturing process. Excuse me. So we use the same 5-step process. The only difference is that the transferred in cost, so basically that snowball that came in from Department 1, or if it's Department 3 or Department 4, those costs that were transferred in, as we go through the 5-step process, we keep those isolated. All right, so that's the number one main difference. Let's skip that. The other thing to keep in mind is as you go through our step 1 calculation, so we have our beginning work in process, but instead of having started, if you're in a second or later department, it always has to be transferred in. All right, it's never going to be started, because if you're thinking about a manufacturing process, Department 2 or Department 3, they're never going to just starting on units. We always have to wait for that flow to come from stage 1 and then go to stage 2 and then stage 3. If we start a manufacturing process, if we just start a new batch of units at stage 3, they never got the stuff that happens in stage 1. They never got the stuff that happens in stage 2. So when we look at our flow of physical inventory, it's never going to be beginning plus started. It always has to be beginning plus transferred in, because we can't start manufacturing at step 3. We always have to start it at step 1, because every one of our inventory has the same uniform process. All right, so that's the second kind of key takeaway, the different. They're the same, but there are slight differences. So it's transferred in. We keep track of the costs and the units, so we have a little bit of difference in wording. Again, we can see here, as we have our physical costs, we separate out what was transferred in our beginning work in process. We separate out the costs that were transferred in, and then we have our additional costs added into this department. So we'll skip there. So as we set up our step 1 and step 2, we have our physical flow, and again, the wording plus transferred in. And then when we look to step 2, where we have our equivalent units, we have the separate column for transferred in. That way we can keep track of all of those units. Gonna go here, and again, I'm not concerned. I'm skipping through some of these, going through them kind of quickly. I'm just highlighting and spending the time on the information you need to know. You don't need to worry about how to do the calculations for Departments 2 or Departments 3. You just have to know the key differences. All right, so we can see there, we have our transferred in for our total costs. And again, if we think about that, why would a company, why is it important to separate out those transferred in versus, if we have in column C and D, the additional materials and costs for conversions added for that department? So the main thing is that we can make management decisions, and we can quickly understand if we're over budget or under budget for the manufacturing, right? It cost us more or less than we thought it would to make our products. We can quickly go back and peel through our steps here and look at, all right, step 1, our Department 1 had $4.40 per unit, and then step 2, or Department 2, added an additional 50 and 35, so 85 cents to our manufacturing. So that way a company can go through, a manager can understand, oh, okay, so it's supposed to cost us $5, but now it's actually costing us $5.25. Where's our difference? Department 1 was $4.40, which is within the normal range. Department 2, though, maybe it was not supposed to be 85 cents. Maybe it should only have been 60 cents or something like that, or 65 cents. So they can quickly go through and isolate and make decisions and understand where our costs are being added. If we just kind of piled up all of our costs and didn't isolate the transferred in costs, it would be that much more difficult to really analyze and understand the costs from Department 2, Department 3, Department 4. Department 1 is easy because it's on its own. It's starting there. But as you go through and we're building that snowball up, right, we're pushing it from department to department. If we don't separate out in each one of our departments what was transferred in from the prior departments, we kind of lose sight of how big was that snowball when we got it versus how big was that snowball when it left our department. So by keeping them separated, we can look at each department individually, and we can make business decisions and understand and evaluate those different departments. So again, we go through step 3, step 4, step 5, same exact evaluation, same exact calculations. We just have the transferred in. Again, I'm not concerned about you guys doing this types of things. I'm just concerned about the differences and understanding why it's different from the first department to a later department. All right, so you go through the same process. We adjust our costs. We have here our unit costs and our gross profit. So basically, we go through and we take the cost of making one mask. We have that total cost divided by the total number of completed units of our last department. We have that the shaping department, it was $4.40. Insertion department, it was 85 cents. So we can see again, usually we're at $5. Where are we off? So we can go back and zero in on the two departments and then do some further analysis. And then we can go through and we can calculate our gross profit. So we sell each one for 10. It cost us $5.25 to manufacture that we just calculated above. So our gross profit on each one of our masks, $4.75. All right. So here's our summarize. And basically, I know this is in Excel, but basically this is what you're going to be doing if you're doing work by paper, by hand. You're just keeping track of this information. So all of our steps can all be in there together, calculated out together. It's a little bit, of a time, and this is Excel, and you can see this is a pretty busy worksheet. So if you do it by hand, it's not terribly hard math. The important thing and the hard thing is just keeping everything organized and neat on your piece of paper. So that means if you need to just start a new piece of paper for the next problem, that's okay. I suggest get comfortable, do the full 5 steps for every one of the problems, or at least do the steps you need to do to get to your answer for the question they're asking. But do it out, get comfortable with it, and then when you start getting to the quizzes and to the exams, it's going to be that much easier to solve these problems. All right. So last thing, the journal entries for a second or third processing department. So again, we add our costs the same way. Raw materials, wages payable, manufacturing overhead, they're all going to get allocated the same way. And again, it's just important that when you put in the work in process inventory, you indicate which department it's actually going to, because we have multiple. Once that is done with our department, it leaves work in process inventory and then goes to finished goods. All right. So process costing versus job costing, we have the same manufacturing costs. We have the same flow of we add it to work in process, and then once it's manufactured, it goes to finished goods, and then cost of goods sold. Really, the only difference is for process costing, we have multiple steps of work in process, and so we move our costs through the different steps of work in process. All right, so that's our difference there. So that's the end of chapter 5. So you guys are good to go. You have a little bit of work to do for the week on top of the PowerPoint. You got your normal homework and quiz. I've also posted another for my live classes. I do this in class for you guys. I give you a workbook, kind of do some practice, a Microsoft Word file with 3 or 4 problems on it, just to get some practice before you do the problems. So we'll get started on that for the week. But this is our last chapter before our next exam. So next week, as you go through, you will have the review, just like the last time, as well as your exam that will be posted on my courses. So good luck. If you have any questions, email me. I hope you have a good week, and we'll see you. We'll see you on the other side. So we'll talk to you later. Thanks. Bye.